The coming week could turn into one of the most influential moments for SoFi stock movement, as several major economic indicators line up to dictate the broader market's direction. With volatility expected to rise, this is the perfect time to break down what factors could push SoFi higher or drag it into deeper consolidation. Let's explore everything shaping the outlook. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell. But before that, this is not a financial advice video. The broader market is stepping into a week packed with data releases that historically have been capable of shifting momentum. Monday is relatively calm with no major scheduled catalysts, but the tone of the entire week will be set on Tuesday, which carries some of the most market-moving indicators: ADP employment data, weekly PPI, retail sales, and consumer confidence numbers. All four have previously triggered market reactions, and this time the stakes are high due to shifting expectations surrounding potential rate adjustments at the December 10th meeting. After recent comments from Federal Reserve members, traders are pricing in roughly a 71% probability of a 25 basis point rate cut. Tuesday's data can either push that expectation near certainty or send it crashing into the 20 to 30% range. Because of that, Tuesday becomes the decisive day for overall market sentiment, which in turn influences SoFi's price behavior. Wednesday introduces another wave of indicators: mortgage applications and initial jobless claims. These also have a history of creating movement, but typically the midweek through Friday period shows lighter market volume, especially during Thanksgiving week. The U.S. market will close early on Thursday in recognition of the holiday and reopen under normal hours on Friday, though participation is usually minimal since most traders remain away from their screens. Lower volume often leads to unpredictable swings driven mainly by algorithms, not human decision makers. Interestingly, this quieter Friday can become a useful window into understanding who is actively shorting SoFi. When U.S. institutions step back, any remaining short activity likely comes from non-U.S. players. If short volume remains active on a low participation day, it hints at foreign engagement. If it drops close to zero, it implies that the majority of day-to-day short exposure typically comes from American institutions. This year's post-Thanksgiving Friday could therefore provide rare insight into the nature of short-selling pressure surrounding the stock. From a corporate-specific standpoint, SoFi has no major scheduled events this week, no fireside chats, no announced updates, and no pre-planned press releases. However, one development circulating through investor discussions is SoFi's expanding ability to send money internationally using blockchain rails. Previously, transfers were focused mainly on destinations such as Mexico, but recent indications suggest that the service may now support sending funds to parts of Europe as well. If accurate, this highlights an expansion of SoFi's global money movement ecosystem and its growing use of blockchain for real-world payment functionality. Many observers believe this type of update deserves an official press release, but it remains unclear whether the company plans to promote it aggressively. The most recent formal communication from SoFi was earlier in the month, so silence may simply reflect internal priorities rather than a strategic choice. Turning to market structure, SoFi's short interest sits near 9.52% of the free float, representing roughly 112.7 million shares. On Friday, short sellers increased their positions by around 1.42 million shares, breaking the declining trend seen earlier. The rise suggests that short-selling firms did not consider the upward price action justified, especially since much of the positive movement on Friday across the market appeared to be driven by algorithmic activity rather than institutional buying. Because of this, the overnight futures market will play an important role in determining whether Friday's rally was simply a temporary anomaly, a potential bull trap, or the beginning of a healthier recovery. Many traders are closely watching how futures behave to understand whether momentum will carry into Monday or fade quickly. In terms of analyst expectations, bullish projections place SoFi's near-term fair value region between $25.50 and $27, while bearish estimates suggest the possibility of a retreat toward the $24 zone. The recent close near $25.19 places the stock between two important support levels, $24.25 S1 and $21.30 S2. On the upside, resistance levels sit near $26.8 and $29.3. Technical frameworks based on Elliott wave modeling show a pivot point around $28.04. As long as SoFi trades under that level, the system anticipates a potential downward move. The model identifies a possible range between the $28.06 ceiling and $19.88 downside target, with the lower end being more concerning if broader market pressure intensifies. One reason for this bearish technical projection comes from Friday's close beneath the 100-day moving average, which generally signals continued consolidation unless the stock quickly reclaims that level. Technical interpretations usually require two consecutive closes beneath or above a moving average to validate a shift in trend, making Monday especially important for SoFi. A continued drop could push the stock toward the 200-day moving average, currently around $19.46 a level that long-term investors often monitor as a potential accumulation point. Examining the order flow from Friday, many transactions appear smaller in size, suggesting heavy algorithmic participation rather than large-scale institutional accumulation. With lighter volume expected later in the week, that algorithmic influence could magnify price swings in either direction. There is also the possibility that new analyst ratings may be released this week. Historically, bearish ratings for SoFi tend to appear during lighter trading weeks, possibly amplifying downward movement due to the influence of automated systems reacting to headline sentiment. While the logic behind some of these ratings is often questioned by investors, the timing of their release has consistently played a role in short-term volatility. Overall, the expectation is that SoFi will continue to trade within the boundaries of the first two support and resistance levels, roughly $24.25 to $26.08, unless Tuesday's economic data dramatically shifts market expectations regarding interest rates. Tuesday remains the single most impactful day of the entire week due to its influence on market-wide momentum. With a critical economic backdrop, shifting expectations for December's rate decision, algorithmic trading activity, and upcoming low-volume sessions, SoFi's share price is entering a period where volatility is almost guaranteed. Understanding the interplay between these elements can help investors follow the stock's movement more clearly as the week unfolds. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.